Amazing amount of activity going on in the market right now, I have to tell you. So it's March 15th. Jason Caskey, Coldwell Banker, Sean Herrero, Cross Country Mortgage, episode 6. Thank you guys for listening. But man, oh man, there is just a ton that is going on in the market right now. We're hearing so much about Silicon Valley Bank and what's going on with the rates, and rates are coming down, and banks, are they closing, and we're worried about this, we're worried about that. But then from our side of the perspective too, my side of the perspective, homes are getting multiple offers right now, and it seems like every home that I've put an offer in on for my buyers is getting multiple offers, and it could be 2, it could be 3. I've seen some 6, 7, 8 offers again, and homes are going for 102, 103% of asking price again, which is amazing.
Yep.
But people are concerned about, well, what's going to happen? What's going on? So I'm seeing that inventory of homes was super low the last couple of weeks. The last week or two, inventory is coming up, but then the absorption rate of homes being pending and going up is also going up. So it doesn't seem to have affected it now, at least. But I know Sean is going to give us a little bit of information about what's going on, where the market is headed. But a seller right now, it's probably a good thing for a seller to get the house on the market, at least start getting it ready pretty quick.
For sure.
And a buyer, interest rates are coming down. I think there's a great opportunity again for a seller and a buyer. So, Sean, give us a little bit of what you're thinking too, because I know we were talking about this and we're both seeing it together, because you're writing a ton of offers for your buyers, and there's a lot going on.
Yeah, every house, every client I've had make an offer, there's been multiple offers. I had one today, March 15th. What is it? It's almost 3 o'clock. Someone today, offers were due tomorrow. They had 7 preemptive offers, and they've already accepted one. So that deal's over and done. And we're just seeing this on every single property. So, everyone's like, well, if the rates are still, high, why is this happening? There just isn't enough supply. There are not enough homes, and there won't be. We've talked about this, I think, over and over again.
Yeah.
But with people having the lowest interest rates in history, starting with a 2 or a 3, they're going to be less likely to sell than they've ever been.
Sell, unless they have to move.
No need. Even if they have to.
Yeah.
But I have a home for $1 million in the Bay Area that I'm going to sell, and I'm going to go buy one in Idaho for $600,000. That $600,000 is going to be more, so they're not going to do it, right? So the supply and demand issue is already back to feeling like 2021 from a buyer perspective. It feels like 2021 again. The volume isn't there. Let's say you had 1,000 buyers in 2021. Maybe you have 500 now.
Yeah.
But the ratio to homes for sale is the same. So it feels to a buyer like 2021, and that's with current interest rates. So with everything that's going on with Silicon Valley Bank and Credit Suisse and all the concerns over the banking industry, interest rates have started to come down. They're probably down 0.25%, 0.5%. From last Thursday.
Yeah.
That's what people want to know. That's most of the calls I get. Hey Sean, where are rates now? I heard they went down. Nobody seems to care why they went down. I think we should care about that. We should understand how that works, because some people are saying, oh, this is 08 all over again. And I'll explain that. But if you're waiting for interest rates to go down, or if we already know they're going down faster than we said May 10th before.
Right.
Well, what is it, March 15th? It's March 15th.
I think we did say in the last video, watch out for March 15th.
Yeah, we should have.
Which is a prediction.
Yeah,
I think there was a moment that we might have said
maybe,
that. And then we said May 10th was the big day, but March 15th...
Then we got lucky.
We didn't anticipate this, but yeah.
And inflation did do better today, so rates would have improved slightly today regardless, but we're seeing more happen. So what's going to happen as rates go down? More people jump into the market. There's still not enough homes for sale. Prices keep going up. So if you're a buyer, jump in as soon as you can. If you see the right house, get the house. That's what matters, is the house. Don't wait for a deal. We've seen what happens when people try to wait for a deal. It doesn't necessarily work out. There's just going to be a constant issue of supply and demand.
Yeah.
Now, if you're concerned that this is 08 all over again, I'll give you a little glimpse into why it isn't. So I did a little research earlier, and what I found is from 06 to 07, because remember, 08 didn't start in 08. It started before that, right? So from 06 to 07, the Federal Reserve was increasing interest rates 0.25% every single meeting. Interest rates went up 2.5% over the course of a 12-month period. Sounds familiar, right? Well, what happened is back then, people didn't have to have a down payment. There were so many zero-down loans. There were loans that they would finance the closing costs. You actually went into the house upside down. So you have this issue where you have these loans that already were risky to begin with, but everyone's just betting on the market going up forever. But then the loan types we were using back then were based on an option arm, a pick-a-pay loan. They had 4 payment options, and the lowest option was 1% interest. That's what everyone saw. We see what we want to see. We see 1%, my payment's based on 1%. And back in 04, 05, you probably were actually paying down your loan balance with that 1% interest rate because the Fed rate was so low.
Yeah.
Well, when they increase it, a quarter percent, it goes up 2.5% over the course of a 12-month period. Now your 1% payment doesn't cover the interest that's due, and your loan balance starts going up every month if you don't make the full payment. So if you have somebody who put zero down and now their loan balance is higher than their value, you throw them the keys. The loans today don't do that. If you have a 30-year fix, it doesn't matter what the Federal Reserve does,
right,
because the money is protected from those adjustments. It just impacts the future. That's what we saw. If you bought in 21, you have a rate in 2.5–3% range. You still have a rate in 2.5–3%. The increase has only affected us today. So that's why this isn't 08. No matter what happens, you won't see the same results because the loan programs and qualifications are entirely different than they were. So supply and demand issues.
Yep.
Concerns over banking, which it's going to bring rates down. It always does. The Federal Reserve most likely won't increase rates next week. So it's just interesting timing, right? To have all this coming together.
Yeah. So Sean, you explained that perfectly well.
Thank you.
All right. So anyways, feel free to reach out to us anytime. Jason Caskey, Coldwell Banker. We got Sean, Cross Country Mortgage. Sean really knows his stuff. And even if you just want to talk just to understand the market a little bit more beyond this video, by all means, reach out anytime. We're here all the time, and we look forward to talking to you guys. But hopefully we'll chat with you, and we'll see you soon.
Cheers.
Take care. Thanks.